Hey traders, today is Monday, May the 1st, and we've got a stock that we're trading that's headed for bankruptcy. And I wanted to talk about how can you trade something that basically is a worst case scenario and still not get hurt. Let's talk about that a little. Okay, so let me walk you through our account here that I'm looking at that has our FRC position in. So this is our ATM program, Asymmetric Trade Management Program. It is a program that takes just 5 minutes a day to change whatever asset allocation model we have. And then you're done for the day. You set it and forget it. You walk away from it. And again, it has a twofold focus. It's more investing rather than trading. So again, it takes 5 minutes in the morning. You put your allocations in, then you walk away. Come back the next day, do it all over again. It is focused on risk management. That's a really, really critical part of what we do here. So here's a couple of things that you can note right off the bat. We talk about position sizing, first of all, right? So this is about a $72,000 account here. And you can see over here the capital requirements for these positions. We have about, at any time, maybe 15 to 35 positions open, just depending on what is happening price action-wise in the marketplace. And you can see that none of these positions are very big. There's a $5,000 one. That's a pretty large position right now. Most of these are $1,000 to $3,000 on again, a $70,000+ account. The FRC position is tying up about 1,300 of buying power. And here's what we did. So here's our transaction activity. You can go take a look at everything that we've done here in FRC year to date. We started this transaction when the banking crisis was starting to come out and things were starting to come down. We said, hey, maybe there's some value in some of these areas of the marketplace. And so you can see that we sold a 6 strike price put and a 20/50 strike price put. This was on the 19th. Yeah, that was on the 19th, February 19th. So if we look at price action on February 19, you can see there's a big hit that it took. This was a stock that was trading at 144, then it was trading at 122, took the hit and kind of leveled out around that $13, $14 level. So again, if you look at activity, this would be the first trade we did was on the 19th. And that would have been right around the price of about $14 a share, a little bit more than $14 a share. Seemed reasonable, right? Seemed reasonable at $14 a share that it wouldn't go down to 6 and it wouldn't go up to 2015. That trade expired fully profitable for us. And so that was a nice entry there. We reinitiated the trade on the 26th by selling a by rolling to the $3 strike price put. So it starts to come down a little bit here. You can see that the price is starting to fall. And so we're like, getting pretty close there to that $6 level. Let's go ahead, let's move that out. So we rolled it down from 6, one contract of 6, all the way down to 3. So we loaded up from 1 contract to 3 contracts, moved our strike price from 6 down to 3. And then we went ahead and we continued to work that trade a little bit more. Stock continues to fall. You see on the 27th, keeps falling. We moved it from 3 down to $1.50 and rolled it out an extra week in length. That wasn't enough either, so we threw on some calls here that brought in a little bit of credit. and we brought in $10.50 in credit there on the calls. Now, if you look at the entire history here of FRC, you can see that on all of these trades that we did, we brought in about $155 of credit. Okay, so we brought in $155. This stock's going to go to zero. We're going to get assigned 300 shares at $1.50. So, you know, that's basically a $450 assignment. We brought in $150. We're going to be $295 in the hole on this trade. This is an account right here where we're bringing in about $290 to $300 a day just in theta income off of this account. And again, that's going to vary depending on, you know, each individual member and how much money they have in the investing account. But the point is that this fiasco, if you will, with FRC should end up just being a little blip on the radar. But of course, it could have been disastrous for somebody had they not properly position sized the trade, had they not known how to scale their money into the trade, to work the trade, to trade around the trade, to look at gestalt and look at the bigger overall picture. So anyway, just wanted to share that with you. If you do want to see how we invest passively with just 5 minutes a day, and then you're done, you close your laptop, you walk away with the dual fold goals or mandates of A, beating the market as measured by the S&P 500, and B, doing it at lower risk as measured by standard deviation or volatility. If you want to see how we do that, you can get a free 2-week trial to our asset allocation model. You can go to tryastforfree.com, and we've got some training there to walk you through. We'll answer any questions that you have. So hopefully that helps you guys on days when you're trading something that goes bankrupt.